Welcome everyone. We'd like to welcome you to another NetHope Solutions Center webinar. My name is Madeline No from NetHope. Today we'll be talking about impact of digital currencies on the nonprofit sector. And today we're welcoming representatives from Oxfam, Mercy Corps, Kiva, and World Vision for our discussion today. Before we get started, however, I'd like to go over a few housekeeping guidelines for today's session. We'd like to keep this an interactive session, so please post your questions in the chat window for our Q&A session toward the end of the hour. Also, we will follow up with all of you by email with a link to the recording and any collateral from today's session. That will also be posted on the NetHope Solutions Center. And we would also appreciate it if you would fill out our webinar satisfaction poll that will pop up in a new window when you leave the Zoom meeting. We always want your feedback and it helps us improve the series. And with that, I will hand it over to my colleague, Layla Toplick.
Thank you, Madeline. Good morning and welcome. It's my pleasure actually to host this discussion with the representatives from 3 of our member organizations and the partners. So we have on this call Rick Shreve, who is the Director of Emerging Technology at Mercy Corps, Stephen Chu, who is the Director of Global Treasury at World Vision International, Michael Dugan, CIO at Oxfam, and Matthew Davey, Chief Strategy Officer at Kiva. If we go to the next slide, Madeline. So first, I just wanted to take a moment to provide a bit of a context for this webinar. During the planning for the discussions that we'll be having at the Emerging Technologies track of the upcoming NetHope Global Summit, it became clear that one of the topics our NetHope community is interested in is digital currencies, as some nonprofits have already began evaluating digital currencies like Libra for humanitarian and development context, while others have questions, and there are also different perspectives on the opportunities and challenges related to digital currencies in our sector. So we wanted to bring together a NetHope community and have a discussion with several organizations that have began exploring digital currencies for their work. And clearly, this is a topic that can take multiple sessions to unpack and discuss. So we've decided to start with this webinar and then continue the conversations at the summit in about a week. So today, we'll first provide an overview of what are digital currencies and why all the buzz. We'll also get a brief overview of Libra. Then we'll have a discussion where Mercy Corps, Kiva, Oxfam, and World Vision will share their perspectives on a number of questions related to the impact of digital currencies on the nonprofit sector. And then at the NetHope Global Summit, which kicks off next weekend in Puerto Rico, we'll continue the conversation. We have 2 sessions planned. The first session is financial inclusion in the age of DLT and digital currencies, and the second session is about exploring new ways of giving. So now let's start with a brief introduction to digital currencies, which will be provided by Rick Shreve. Rick, over to you.
Thank you very much. Hello, everybody. Thanks for attending the webinar. I'd like to start out with just really a sort of nuts and bolts description in broad strokes of what digital currencies are, and then a quick look at Libra in a little more detail, as that's sort of the new kid on the block that's getting a lot of press. If we can go to the next slide, please. Digital currencies at their most fundamental are electronic representations of value. If you prefer to think of them as electronic money, that works just fine as well, because that's typically the form that it takes. But it's important to note that it could also be a representation of some other sort of physical asset, whether it's pegged to the value of a specific currency or pegged to the value of gold, or even perhaps representing the output of a plantation, for example. So there's a lot of flexibility that can be done with digital currencies, a lot of flexibility that can be created around them, but the most common usage is as a substitute for traditional currencies. Those digital currencies are typically exchanged either online or via digital wallets that reside on a mobile phone or live on the web. Next slide, please. Digital currencies, in terms of their attributes, tend to be cheaper to transfer than traditional money, particularly through the banking system. They tend to be faster to transfer, again, for the same thing. And they're also very, very useful for creating easy to use and easy to understand audit trails, because behind digital currencies, at least the majority of them that exist, there exists an electronic ledger known as a blockchain. And that ledger tracks every single movement of each coin in that currency. And because of the nature of that blockchain, it creates an audit path. Each of the movements of the coin, once that data is written into that ledger, cannot be changed. The data is immutable. It also is largely fraud resistant due to the peer-to-peer nature of the network. Now, I'm not going to dive deeply into that topic. If somebody has questions about it, we can get to it later. But suffice it to say, there are certain attributes of digital currencies that make them quite attractive to people not only in our sector, but into other places like banking and finance as well. Now, in terms of examples, what are we talking about here? Well, the thing most people know is Bitcoin, of course. But Bitcoin, though it was one of the earliest of the modern digital currencies, it's been around for about 10 years now. There are a large number of variants, either based on Bitcoin or that take a completely different approach. Can we go to the next slide, please? Now, what would we use digital currencies for? Well, typically speaking, it falls into this group of use cases. In our sector, we can use a digital currency for direct cash assistance or cash transfer programming, depending on how your agency refers to it. In other words, providing assistance directly to beneficiaries with something other than physical goods. We can also use a digital currency to function as an electronic voucher. So we can use it also for our internal cash movement from one branch of our agency to another, or to one of our country teams from offshore. We can also use it as a way to represent a physical asset that we own so that we can track that asset using that blockchain ledger. And digital currencies also present new ways of giving, opening up that whole topic of what we sometimes refer to as crypto philanthropy. That is, giving digital currencies to support our mission, or using digital currencies in other ways that help subsidize us. Next slide, please. Libra is the most recent of this crop of digital currencies and the one that's getting a lot of press right now. Libra was incubated by Facebook. It is a separate entity known as the Libra Association that is not controlled by Facebook. Next slide, please. In a nutshell, it is a new type of digital currency. It's a type we call a stable coin. And what that means is the value of the coin is pegged to some other asset. In this case, in the case of Libra, it's pegged to a basket of global currencies. It's also fully backed by a reserve. So in other words, for every $1 worth of value of Libra that's floating around out there in the world, there's $1 worth of assets locked up and managed in a reserve. Now, there are other stable coins out there. There's a coin that gets a lot of press called Tether, several others as well. Those coins typically are pegged to the value of the US dollar. So what Libra is doing is slightly different here by using the basket approach. Coins like Tether are also backed by a type of reserve, though the way it's structured is a little different. Stable coins are interesting because they don't have the same degree of volatility of things like Bitcoin. Things like Bitcoin are driven up and down in their value largely by market speculators. And there's no motivation to speculate on a stable coin due to the fact that its value is pegged. You can't push it around and make it worth more and make it worth less by conducting large transactions. So it is, in other words, a low volatility currency that is not attractive to speculators. Next slide, please. In addition to the coin, there's also that ledger in the background, that blockchain. Well, in this case, the Libra blockchain is what we call a Turing complete blockchain. What that means is that you are able to run programs on top of that blockchain. It has all the logic needed to create conditional statements and to program it to perform tasks automatically. This is the basis for what's commonly known as smart contracts. So the Libra blockchain not only provides the ledger for tracking the movement of the coin, it also provides a tool that we can use in development practice to automate payments and movements of value. The Libra blockchain is also open source, which is a good thing because that means there's a great deal of transparency around the development of the blockchain. And it means there's an open ecosystem where people can participate, see the code, contribute to the code, and build applications on top of it. Next slide, please. There has been from the beginning a very large emphasis from the Libra Association on financial inclusion. There is also a very conservative approach towards KYC, AML, and ATF. In other words, the know your customer, the anti-money laundering and anti-terrorist financing regulations that are being promulgated by various governments around the world and central banks. The idea here is that Libra wants to be acceptable in a wide variety of contexts and wants to be acceptable by government and regulatory agencies. Libra is really trying to build the broadest possible platform for acceptance of the coin, as opposed to, say, some of the highly anonymous coins that exist like Monero or Zcash, where the entire selling point of that coin is that everything you do is anonymous and you are completely anonymous. While that has some utility value in some scenarios, that also really opens it up for use by bad actors. And it also opens us up for the possibility of violating the regulations under which we as aid agencies have to operate around the world. The financial inclusion aspect of the Libra Association is very important as well, because it means they're trying to decrease the disenfranchisement that we see today that's resulted from the current approach of central banks to not only government currencies, but also to access to the financial system. Next slide, please. The system that runs Libra itself is called the Libra Association. Now, all of the members of the Libra Association run the nodes that comprise the network for that blockchain. In other words, they actually help maintain and support the credibility and the resilience of the network. The Libra blockchain is what we call a proof of stake system. That means it's not open to just anyone to join. Someone has had to put up a stake. In this case, it's $10 million. That $10 million acts essentially as a performance bond that assures the person maintaining that node will act in a proper fashion and will perform their tasks and keep that node available so that the network maintains its integrity. Next slide, please. The association's goal is to have 100 and perhaps more members, with no member controlling more than 1% of the voting power. Now, Libra was launched on June the 18th with a set of founding members. Presently, there are 27 founding members, of which 4 come from the nonprofit sector. Those 4 are Mercy Corps, Kiva, Women's World Banking, and a small group called Creative Destruction Lab. Those 4 nonprofit members are part of what we call the Social Impact Advisory Board. If we could go to the next slide, please. That Social Impact Advisory Board helps steer the Libra Association and keep it true to that vision of financial inclusion. That board also is slated to manage a fund for social innovation that is derived from the Libra Reserve. Currently, the amount that's under discussion is $50 million, and that would be something that anyone could apply for grants for, and the Social Impact Advisory Board will help review and disperse those grants. The idea, again, being to promote financial inclusion. Next slide, please. Facebook is involved peripherally through the creation of their own wallet. They are creating a wallet that is called Calibra. A confusing name, but that is the name of it. Don't confuse the two. Calibra is not a Libra Association product. Libra Association, nonprofit based out of Switzerland. Calibra, commercial product owned by Facebook. That wallet, that digital wallet that allows people to move the coin around, is going to be integrated into both Facebook Messenger and into WhatsApp. Additionally, it'll be available as a standalone mobile application for both iOS and Android phones. And for many people, this is the super exciting part about Libra and how Libra gets to scale so quickly, because all of the people who have Facebook Messenger and who have WhatsApp will be able to activate, integrate that wallet into their existing application and use it for transactions. And currently, the population of WhatsApp alone exceeds the population of China. So it's really the first digital currency that has the potential to achieve global scale. Now, since Libra is an open source project, there will be more wallets than just the Calibra wallet. Indeed, there are already a couple of wallets that have been released by developers around the world, and we're going to see a lot more of those wallets. So users will have their choice. They can either work with the Calibra wallet and be part of that Facebook ecosystem, or they can choose a third-party wallet where their data is outside of the Facebook ecosystem. There are no restrictions on other wallets. You don't have to be part of Facebook to use Libra. You don't have to use the Calibra wallet. That'll be a choice made by users, just like it is right now. Can we have our next slide, please? Currently, the membership for node maintainers, that is the people who are in the Libra Association, is restricted to the people who've put up the stake. In other words, the $10 million stake. It's what we call a private blockchain. However, in the Libra founding articles, there is a commitment to move the organization to a fully public blockchain, and the association is tasked with having a process for this formulated within the next 5 years. I'll say right up front that this is new territory. While it's a wonderful aspiration, there isn't actually a track record of private blockchains moving to public. The governance challenges are really significant. And there are a number of people who look at this as being a very heavy lift and will be a significant challenge for the association. Nonetheless, the vision of Libra is the broadest possible inclusion, not only in terms of who can use the currency, but who can actually participate in growing that network itself. So that, in a nutshell, and I realize I've moved through it fairly quickly and at a very high level, is what digital currencies are about and what Libra, the most recent entry into the market, is about. I hope that provides enough information for us to have an informed discussion about this. If I've missed anything or there's any glaring questions, obviously use the chat functionality and the panel will get to the questions. But I want to stop there. I don't want to monopolize this conversation. I'd like to move us back to the panel.
Great. Thank you so much, Rick, for this excellent overview of digital currencies and Libra. So if we go to the next slide, so we'll now transition. Rick, did you want to cover this before we transition to the questions?
Yes. That's the joys of not running one's own slide. You're always wondering, is there another slide? The initial white paper in the testnet was launched June the 18th. Sometime in 2020 is when we'll actually see the live project and the coin out into the world. So the point was simply, what's our timeline for this to happen? And that, with some high confidence, I think is the last slide.
Yes, it is. Okay, so we'll transition now to a panel discussion. And now this is a different model from what we typically do on NetHope webinars. We actually don't have any more presentations. Instead, we'll have a virtual panel discussion. And first, we'll get through a set of prepared and pre-submitted questions, and then we'll open it up for audience Q&A. And as Frederick noted in the chat window, please post your questions in the chat window. We'll get to as many questions as possible. If needed, we can also follow up with an FAQ. So if we go to the next slide, Madeline, we'll start by hearing from each organization their perspective on whether and how digital currencies are affecting nonprofit sector. And as you respond to this question, what I'd like to ask Rick, Matthew, Stephen, and Michael to do is to share what your organization is doing with digital currencies, even if it's in the exploratory stage right now. So let's go to Rick, then Matthew, Stephen, and Michael.
Thanks. In terms of how digital currencies are affecting the nonprofit sector, speaking here, in the Mercy Corps context, we are currently experimenting with using digital currencies for our cash transfer programs. And the modality that we are using right now is using it as an e-voucher. So it's really a closed loop system where we work with the beneficiaries to get digital wallets installed on their devices. We go through digital literacy training with them. And then we actually do the transfers electronically of the coins into their wallets. Then we've set up vendors who can accept those coins. Then the beneficiaries are able to transact with the vendors. The vendors can then remit turn those coins in for the local currency. Some good learnings coming out of that. Obviously struggles with things like digital wallets and infrastructure. We're really finding the upside on the audit side to be significant. We're also finding that it saves us a lot of time on the procurement process and does save us money. We are also exploring digital currencies in other contexts, but the only thing we're actively testing right now is what I've just described. And I assume we're going to go through this question by question. You don't want me to respond to all three at once, correct, Lila?
That's correct. So we'll go to Matthew now. Thanks, Rick.
Great. Hi, Matthew Davey here. So from the Kiva perspective, when you get out, we're currently in 83 countries. We've operated in over 90 over the past 15 years deploying capital. It's really hard. The last mile is cash. And as digital gets to the last mile, which is happening now, if you go to rural villages in Uganda or Sierra Leone, digital is actually getting there for real with internet connectivity and device access. And so there's been a lot of challenges that have not been able to be solved in the last mile, i.e. cash is difficult to trace, cash is difficult to store. People have a hard time building up savings in cash. I think that's a huge opportunity. In terms of what we're actually doing, Kiva is actually deploying, I would say, a layer below digital currencies right now, where we're actually working with governments to do digital KYC checking and implement decentralized identities so that as digital comes to the last mile, people are empowered and have agency and could actually take advantage of digital currencies in a way that works for them. And so I think over the next decade, as digital gets there, there's going to be a huge opportunity in the development sector to leapfrog 30 years of hard processes and actually provide agencies through digital currency and other digital systems to end borrowers or end customers.
Great, thanks, Matthew. Over to Stephen for the perspective for World Vision.
Sure. Thank you so much, Leila, and that great introduction, Rick. There was a report put out, I guess, last month. I'm not sure the validity of it, but at least it's called Global NGO Technology Report. It polled about 5,700 NGOs across 160 countries. For me, the takeaway that was that, and I know that there's a lot of definitions around cryptocurrencies, virtual currencies, digital currencies, but this report described cryptocurrencies really only forming about 2% of global donations for North American, European, and Australian NGOs, at least those headquartered there, receiving funds there. So it is a small amount as far as I can see. One of my hats is to manage this Treasurers Roundtable. It's about 100 of the leading NGOs, universities, and foundations, primarily with US headquarters. We do constant surveys and checks to see where people are moving and what their progress is in different fields. Our experience in kind of surveying NGOs in our membership actually mirrors that report, so rather small. That said, there's a significant handful of NGOs who are actively experimenting, including those on this call, as well as a number of others. In my role at World Vision, I do a number of different things. One of them is to oversee blockchain and cryptocurrency activity. World Vision currently has 3 different, I guess I'd say, blockchain crypto type projects or experiments in different contexts. One, which is called Sika, out of our Nepal Innovation Lab. It's a digital asset transfer program. I can go into much more depth around that if you would like. As well as we have an LMS cash solution program, which is basically an e-voucher component to our cash distribution, which we can turn on and off according to the need. And both of those, the Sika project and the LMS, are tracking Ethereum. And I believe Sika is actually experimenting with other blockchains as well. And then we have a third project, which is Cartambele, out of our World Vision Timor-Leste office, partnering with local fintechs to develop, I think they're also tracking to Ethereum as well, basically a digital asset transfer program using value cards. Each of these are in pilot stages. I think the Sika project is the one that has generated some initial findings, including, I believe, 78% cost savings from staffing to travel to just cash distribution to beneficiary costs. So initial results are good, and we're in the process of trying to scale those projects.
Thank you, Stephen, for sharing what World Vision is doing. Michael, over to you.
Hi. So we just, I guess, need to be a little bit precise in language. because, you know, I think there's a significant difference between the use of digital cash and cryptocurrencies, which is the subject of the call today. One obviously being the legal currency, the country we operate in, and the others being alternative currencies, you know, backed by other entities such as Bitcoins, crypto, or stable coins. We've been working with digital cash for quite some time, certainly since M-Pesa was out, but we've been working before that. We started in the early 90s when we set up our humanitarian cash transfer program, when we started thinking that the better idea was to get cash as quickly as possible into our program participants' hands rather than in kind. And in the aftermath of the tsunami in Asia in 2004, we formed with a number of other agencies the CALP Alliance to consolidate the type of learning that we were making around the use of cash in our programming. If I were to, and we've been working ever since with, depending on the context, with various forms of digital currency. So an example, obviously, being Kenya, but one of our most recent programs was in Vanuatu, where our Unblocked Cash project used blockchain to deliver a card-based cash distribution. And I suppose the key part of the Unblocked Cash project was that we developed blockchain from the bottom up with the community. And we worked with the community and identified actually that the people that we needed to get cash to were single mothers, widows, people with disabilities, and LGBTIQ members of the community. So we spent a lot of time there developing something that would work in that context. So we went with cards instead of cell phones because they weren't available. And we found that simple tap and pay cards worked. We could register the recipients very easily. And because of faster weekly payments, you know, smaller shops and market stall holders were able to participate in the process. So it was a much more localized and inclusive delivery model. And we could also see how those funds were allocated and spent. We gave live dashboards to the partners we were working with, and worked with the community as well to allow us to troubleshoot and solve complaints. So we're very much working in that space. I guess that's at a tactical level, but at a strategic level, I think the opportunity of digital currencies is to disintermediate large NGOs like Oxfam in favor of implementing partners or potentially the beneficiaries and people we work with. So what I mean by that is the disintermediation is that if donors can bypass us and get cash directly to local partners, they can bypass us as organizations. And this is actually a commitment we've made under the Grand Bargain, 25% going to local partners by 2020. So I think that's going to be the really big impact of digital currencies. It will not be necessary to have a big international NGO to get cash into the hands of people. Therefore, we're going to have to figure out what value we add in those processes.
Thanks, Michael, for adding in your perspective and providing some of the examples. Just quickly, following up to the earlier points from Rick and Steven, so Mercy Corps World Vision, there was an ask for clarification if you're speaking to digital cash or cryptocurrency.
Speaking for Mercy Corps, the example that I gave is using a cryptocurrency.
And Stephen? Stephen, you're on mute.
Can you hear me now?
Okay. Yeah,
okay.
We can hear you now.
Sorry about that. What I was trying to say was the Nepali government, I believe, has restricted cryptocurrencies in the country for our SICA project. The workaround was that blockchain is distinct from cryptocurrencies. SICA basically upholds all local and national laws regarding cryptocurrency, but uses blockchain to basically transfer digital assets. So they are not buying or selling cryptocurrencies, it's a digital asset.
Okay, thanks. Thanks for the clarification. So, and thank you all who are posting the questions in the chat window. So as we go through the rest of the prepared and pre-submitted questions, what I'll try is also group some of the questions so we can get through as many as possible. And if you need clarifications, do post the questions in the chat window. So let's continue unpacking some of the challenges and opportunities of digital currencies like Libra for international development. What problems are we trying to fix with digital currencies? What are the risks and issues? And one of the questions from the audience is, what are the advantages of this type of digital currency, Libra or Bitcoin, over local electronic money, like mobile money transfers? And why not just use existing mobile money services? So the pros and cons, and keeping in mind some of the questions that we're getting from the attendees. Let's go back to Rick, then Matthew, Stephen, and Michael.
Well, to respond to that last question first, why use a digital or a cryptocurrency as opposed to using existing local electronic money? There are a couple of reasons. I mean, first, the cost of local electronic money sometimes is actually rather high. You know, M-Pesa is not the cheapest platform for moving money. Things like using crypto and some of the modern digital currencies have a much lower cost base for moving money in and out of the system and for exchanges using that currency. Additionally, the audit trails that are generated by the blockchain are a significant enticement for using these systems. And finally, the third point is that, you know, control. You're actually able to disperse the funds yourself directly. You don't need to go through procurement, work with the third party, worry about third party fraud, etc. So you have much more direct control over the process, lower costs, faster transfers, and a better audit trail.
Thank you, Rick. Matthew, anything to add on the pros and cons?
Yeah, I'll start echo everything Rick said, and there's two things I'll add. One is, you know, when you talk about decentralized technologies and cryptocurrencies versus something like mobile money, to us, a lot of it comes down to the system default. And we believe that all technical systems will revert to whatever the default is over time. And really, almost every existing system out there, your agency by design and by default is with another institution. And that's not because the institutions are bad, it's because the internet was not set up to be decentralized the first time around in the 90s when it really took off. And so when you look at cryptocurrencies, it really does allow, and you can see this in the case of Bitcoin, it allows the individual to have agency. In Bitcoin, it's very extreme. Like, I can use private identifiers for everything and you can never trace anything I've done. And there's a lot of things to wrap around that for compliance purposes and for consumer protection. But it's really important that system default gives users agency, because when you're talking about going to vulnerable populations, you never know if they're going to become a refugee tomorrow. You never know if you're trying to get a remittance to the wife if the husband is skimming it. And having agency by design and by default with the end human being is really important. The second thing I'll say is the interoperability you get with decentralized technologies, and that tends to be baked into all cryptocurrencies. And what I mean by that is I can operate in multiple contexts. So I can have a system that runs in Rwanda that is subject to all the rules of Rwanda. And then I can have an interoperable system that's running in Uganda. And those two can be interoperable without Rwanda and Uganda having a trust agreement between them. And so when you start thinking about vulnerable populations and migrants who are moving around multiple countries and multiple regulatory contexts, you get away from the human being losing agency because they happen to cross a geopolitical border. And I think those two things are really fundamentally important about decentralization and cryptography and the special moment we're going to be in over the next decade of technology.
Great, Matthew. Thanks so much for your perspective, adding in agency and interoperability into the discussion. Stephen, over to you for any additional thoughts on pros and cons.
Yeah, I think these are all great comments that I've heard so far. I'm a pessimist by nature, by personality, and I'll throw a couple of my general cons in there. We generally have, I would say I have had a number of questions around the Facebook Libra project. We have had a number of conversations with them over the last year, really great conversations. However, honestly, the concern that I have for them, as well as other groups that are putting themselves out there, is actually around transparency, which is ironic considering that's really where I think a lot of blockchain efforts are to try to increase transparency. Basically, when there were further questions around the governance model, around the financial inclusion strategy, around the technical platform, around the country target rollout plan, around the regulatory compliance KYC processes, around the financial and business modeling, basically the devils in the details for some of these different types of blockchain or cryptocurrency type ventures. We are still looking for more information. We're very much interested in where Libra and Facebook end up going, but I do think there's a lot more transparency that needs to happen. And I understand that there's a lot of these governance-related association consensus that needs to happen through discussions, but it does raise a lot of questions around how much is there clarity and transparency around this process. I can go, I've got maybe 10 or 15 different kind of ongoing questions around, specifically around Libra, from whether or not it actually can move from a permission to a permissionless solution. Will it ever become decentralized? How are the controls around digital identity and behavior, privacy of digital identity going to be maintained? How fast can it actually run? Comparatively to the need that would have to happen? How will it ensure monetary sovereignty of the different countries? How will regulators of all different flavors, they're probably, every day I get 5 to 10 different emails about different regulators slamming down on Libra. How will it address KYC? Rick mentioned the conservative nature of it. For NGOs, I'm very much involved in a lot of the de-risking kind of conversations. And it is a very key issue if we as NGOs should participate in something which further accentuates questions around KYC. Will there be, why are providers like PayPal, who the former lead of PayPal is now the lead of Libra, why are they stepping out and no longer participating as the first player to leave the actual association? What are expectations of users? There's a lot of different issues that need to be unpacked, and I think there's a lot of great opportunity there. And I applaud the efforts by Kiva and Mercy Corps, Women's World Banking to jump into that fray, but I do think those questions need to be answered prior to moving forward.
Yeah, Stephen, thanks for flagging some of these questions. Also, we'll get to some of them a little bit later in the discussion. Just to keep us moving forward on this specific question around pros and cons, over to Michael for any additional perspective on this.
Yeah, and look, you know, a lot of really great points being made there. We also need to talk that in many ways what we're talking about here is not just an alternate currency. We're talking about the formation of an alternative banking system. Really, from our perspective and where we are, is we need to practice that core mantra of the humanitarian, to do no harm. And our critical evaluation at this point is that we see absolutely the opportunity, but we also see some significant concerns. You know, the legality of those such currencies and sovereign currencies it's a major thing for a country. Even Argentina have just announced currency controls. The long-term impact on southern economies has to be understood. We are an international non-governmental organization, and what that fundamentally means is that we are there until the government can step in. We're there to build up government and civil society in the global south, not to replace it. So undermining the softer currencies is going to have a substantial impact. If we're buying government instruments from the global north, such as the US and Europe, that leads to a very stable coin, but it also reinforces the flow of money to the global north. We have challenges around taxation. And finally, governance, transparency, and accountability is a worry. Aside from that, we still need to go back, you know, from those macro issues to the I suppose, the localized issues. And this is why I use the Vanuatu example. We need to look at those 6 barriers to the equitable use of technology, because the use of technologies like this can drive inequality. So the availability, the affordability, the awareness, the accessibility, the ability and the agency, particularly of the people that we work with, all need to be considered when we're deploying these types of solutions. And I'm not saying that it can't be done. What we demonstrated in Vanuatu, if you work with local communities, it can do. But there are many, many examples where we've introduced currencies, digital currencies, where it's actually strengthened inequality in local communities and has done more harm.
Thanks, Michael. You're actually raising some of the points that we'll get to in a couple of questions that are coming. There's a follow-up question on the pro and cons. The second question, wouldn't using a local market service be more sustainable? So this question around crypto versus mobile money. After the NGO cash transfers, and would recipients have more long-term use from being able to use mobile money, and especially in regards to accessing a wider range of financial services, additional remittance and payment services, potential digital savings and credit and insurance, if any of the panelists want to comment on that. Rick, Matthew, Stephen, or Michael? All right, it sounds like Rick.
All right, sorry, I'll jump in. This is Rick. I was trying not to dominate the conversation, so I was allowing other people room to speak. You know, certainly to respond to the question, certainly I think there are scenarios where the local ecosystem is developed adequately to the point where what you described is possible, and the beneficiary population is the right beneficiary population for that sort of you know, where the idea of having that sustained course of interaction would be a desirable program design attribute. So I think the answer is theoretically yes. However, at least speaking for Mercy Corps, you know, in the vast majority of the cases where we're actually involved in cash transfer programming, you know, these people are going to convert to local cash almost immediately, or convert to the things that they need almost immediately. And that sort of longer term, you know, interaction with the system really isn't the key pressure point for them. It doesn't address the, you know, we're concerned with their immediate needs in that case. Where we're looking at trying to model a more resilient and stable ecosystem within a particular community, those design attributes do come into play. And of course, we want to work with local market players and strengthen the local market and strengthen the local economy. So, you know, this isn't a yes or no question. This is an A or B comparison. This question actually goes more to program design, right? And matching the right partners and the right ecosystems to the right beneficiaries and the right needs.
Rick, thanks so much for jumping in. So I'm going to move to the next question, and I'll also combine with some of the questions that are coming through the chat window. So the question is around the impact of Libra on the humanitarian development programs. There's also a question regarding digital identity component in Libra's approach and strategy, if you can comment on that. And as we go to actually Rick and Matthew, would love to hear from you if you can share how was it that Mercy Corps and Kiva got involved in Libra. So let's go to Matthew, then we'll come back to you, Rick, since you just spoke.
Yeah, maybe I'll just speak to the third one first, which is how do we come to be involved in Libra? You know, Kiva's been around the unbanked world working on financial inclusion for 15 years. And so part of it is for 15 years, we've been operating in over 90 countries, working on trying to solve financial inclusion. And this is a global problem, and it's going to require a massive global consortium-based response. And so when we were approached by the folks at Libra, as Facebook was incubating it, this is not the easy thing to do. Like, it was very clear there were going to be very hard things, that Libra was going to force discussions about what does digital mean in a non-digital context, and what does it mean to pull together a global consortium that might seem like a power club looking at it from the outside in. And the other side of that coin is, how are we ever going to solve a problem for 1.7 billion people if we're unwilling to talk to Facebook, who has 2.3 billion monthly active users across its products? Like, I would posit that it's impossible to go and solve the world's problems without bringing the existing system on board. So how did that lead to Kiva being involved? We look at ourselves as a voice for the voiceless, that we've spent time in these villages. And so any global effort that is working on bringing financial inclusion and has a shot to do it, and we look at what Libra is doing, and we look at what digital currencies can do, and we look at where we think the future that we want to see in 5 to 10 years, the unbanked world is going digital. So our ability to provide a voice for the voiceless and help make sure that we can be an advocate to shape Libra for a force for inclusion and a force for good globally, we will always take that seat. And it's not easy to do. Like, everybody has seen how this has played out in the press and how this has played out with regulators. And I think Libra is forcing conversations that we haven't had to have before at various levels of government and individuals. And I actually think that's good. I think those discussions need to be had. So that's why we're involved. A voice for the voiceless. And I think all of these things do need to play out. And so we are very proud to be moving along with Libra to force those discussions and hopefully have Libra be part of the future we want to have.
And okay, thanks, Matthew. Let's go to actually Stephen, if he can talk to the impact of Libra on the humanitarian development programs.
Yeah, I mean, I will repeat some of the things that Matthew just mentioned. I do think the value, one of the key values that Libra has is putting virtual, or I'm going to morph all these terms, but virtual cryptocurrencies into the fore and drawing a lot of attention. You see the Chinese central government trying to put out virtual currency prior to Libra's launch, or at least attempts. There's a lot of news around that. You've got 40 to 50 central banks all trying to jockey around how to develop a cryptocurrency or a digital currency. You've got a lot of effort from regulators. You've got FinCEN, one of the kind of regulator examiners trying to figure out how to develop appropriate regulations around this area. There's a lot of attention that has been drawn because of the announcement and the effort that Libra has, which I think is a wonderful, important thing. The other thing that I'll say, and this is not necessarily about Libra, but if you start tracking the use of virtual currencies in fragile contexts, such as like the Venezuela's or the or just conflict or challenged contexts, Cuba, there's Iran. There's a lot of different anecdotes of attempts and needs because of the unstable currency for funding. You've got bank lines going down the street, and how are these folks being able to address their needs? There are opportunities for groups like Libra to speak into that. That said, because of the regulatory overhang, there's uncertainty around where Libra stands. Not to say what the effort it has pushed forward has really moved the sector forward, or at least moved this space forward, but a lot of these issues are just still out there. The uncertainty is pretty serious. And also for the NGOs who may be highly recognized as potentially risky, which is not necessarily true, that creates more challenges in engaging banks and regulators.
Thanks, Stephen. As we go to Michael and then Rick, one other just consideration point, just based on the questions in the chat window, as you think about the impact of Libra on the humanitarian development programs, there's a question around how does cryptocurrency work for users who are in communities where smartphones and in some cases electricity is not prevalent, as we think about and talk about inclusion. Michael, over to you, and then we'll go to Rick.
Yeah, so specifically on access in the markets that we operate, as has been said earlier, it is about good program design. And I think there are a lot of great examples, and it has very little to do with the technology and really about that engagement with local communities. And again, as I said, that the Unblocked Cash project, I think, was a great exemplar of how you can introduce digital cash in a way that doesn't drive inequality. My own perspective is that it is far too soon to tell what the impact of Libra will be. And I think plainly Kiva and Mercy Corps are on the vanguard here of actually opening up this conversation in our sector. And the challenge is that the technology, once again, is moving a lot quicker than the institutions, either the NGOs or indeed the countries that we operate in can move on. Even in Estonia, where I am today, the Estonian government is trying to bring in a cryptocurrency, the Estonian coin, which the European Central Bank is now trying to shut down. So one of the challenges over the next 5 years is trying to understand how we can still be effective and deliver the most effective programming with digital to our program participants, whilst also balancing that with, chasing technology for its sake. So I think, again, it goes back to the learnings that we've made since the early 90s when we started moving to cash-based and digital humanitarian programming, and just not forgetting that regardless of the new technologies coming out over and new currencies coming out over the next few years.
Thank you so much, Michael. Rick, as you reflect on the impact of Libra, if we can go back to one of the questions that we had regarding digital identity component in Libra's approach and strategy, if there's any.
Yeah, sure. Let's start with the digital ID question. I see a couple of people have asked that. The Libra platform itself is digital identity agnostic. There is not a new digital identity standard or an existing one that's tied directly to Libra. That's going to really be a question for the digital wallet maintainers and for the exchanges, because that's the point where the KYC occurs. I hear through the grapevine that Facebook may be working on a digital identity solution, but I don't know that for a fact. Heaven knows there's a whole bunch of them in the marketplace right now. So I think that considering the number of competitors in that space and the lack of ambiguity on what's going to become the dominant platform, the decision to be agnostic on this point was the right decision. So yes, no digital ID solution built into Libra. I see we also had a question about how do we use these things in situations where the infrastructure is limited? Well, first off, don't assume that the use of digital currencies is restricted to only smartphone environments. There are systems, including the Sika system that Michael referenced earlier. I'm sorry, that Stephen referenced earlier. Sorry about that, guys. That work through the SMS layer. There are also systems that work off of near-field smart cards, such as the system Michael referenced earlier in Vanuatu. So there are different ways to use these things to get them into the hands of beneficiaries, and the back end oftentimes is being done with a digital or a cryptocurrency. And of course, the beneficiaries have no idea. They simply have the card in their hand and it works, and they're able to exchange it for value. And it's created in such a fashion that it makes sense and it's explainable to them. So infrastructure isn't quite as big of a limitation as you might initially think it is. In terms of the impact of Libra, at MERS, yeah. Hello?
Keep going.
Sorry. In terms of the impact of Libra, at Mercy Corps, as far as we're concerned, Libra is another tool in the toolkit. The current trials that we're conducting are not based on the Libra platform. They're using tokens based on another blockchain. We are looking at a variety of different coins and different approaches. Libra will be one of those approaches, and it will fit into our larger financial and digital financial inclusion strategy. We currently work with e-vouchers, with coupons, with debit cards. We work a lot with MasterCard. All these different modalities will be chosen based upon what's the right match for the program and for the beneficiaries in the ecosystem. We, however, look at something like Libra, which is a low volatility, low cost, cross-border currency with a good accounting system behind it, the blockchain ledger, and we see tremendous potential there. And so it is very, very interesting to us. Maybe Libra will triumph and become, a new sort of global standard. Maybe it won't. But I think at this point in time, one of the most important things that has happened is that it's changed the conversation. There's now not only much more engagement from the regulators on how to create an ethical, proper system that uses digital currency, but there's also a discussion that's happening right now about whether the current banking system really serves the best interests of the broadest swath of the population. And those discussions, while they may have been occurring on the sidelines before, they're now front and center. And I really do credit Libra for that. And so, from my perspective, I think it's already making a difference. And I will echo what Matthew said earlier. He literally took the words right out of my mouth when he talks about we are in there because we view it as something that's potentially transformative. And in a situation like that, it's better for us to have a seat at the table and engage and represent those people that normally are voiceless in those conversations, despite the risks.
Thanks, Rick, for addressing a number of questions in this reflection. So we have about 6 minutes left, and there are kind of two sets of questions that I'm seeing. One is related to funding and resources and knowledge. The other one is related to the regulations and policies. So let's start with the set of questions related to legal complexities and regulations. So I'll just read a few questions and get a reflection from the panelists. What are some of the local, regional, and global governmental regulations constraints the countries may face when embracing Libra? And then specific to NGOs, how do NGOs manage the legal complexities of managing or utilizing digital currencies in the countries in which we work? How do we understand the risks that come with operating at this cutting edge space without risking the quality or delivery of the programs? Matthew, would you like to comment on this question?
Yeah.
Or set of questions?
Yeah, so the first point I make, and it kind of comes back to Libra forcing what I would consider to be at the beginning of the right conversation, is that as the developing world, where a lot of us in the social impact space focus our efforts, or even in marginalized populations here in the United States or in Western Europe, so far, or for most of recent history, digital has operated mostly outside of the regulatory context. And I think when you start thinking about the risk of these things coming, one thing that's nice about Libra is it is forcing discussions that are, like we are involved in this on the ground in many countries. It's actually updating regulations to be inclusive of this so that there is a legal framework in the country you're going to be operating in that speaks to exactly how cryptocurrencies or decentralized technologies or digital identity should work and how they'll be regulated. And so I do think over the next couple of years, a lot of the stuff that's now in a gray or a black area in terms of complexity and risk should move to the gray and white area of there are frameworks and definitions around that. And everybody is working on this when you get to those countries. World Bank, CGAP, Aspen, WEF, like you can go down the list of advisors on policy. And so I am very bullish that over the next couple of years, it won't be feeling as risky to go and do these things because, again, things like Libra are forcing those discussions on the ground in these countries. And they're just leapfrogging, saying, here's the regulatory system we need by 2025, so let's do it now.
Thanks, Matthew. Any additional thoughts and perspectives on this sort of questions about legal frameworks and regulations? If not, let's move to the next sort of, go ahead, Rick.
Yeah, just very briefly, so we can get to the other questions. In terms of legal complexity, how do we make sure that we're in compliance in all the different countries where we work? You know, Mercy Corps works in 40 plus countries at this point in time. And the frank answer is it's a big lift. It takes a lot of effort from our general counsel and their team. They spend a fair amount of time looking at this and going round and round with this. You know, the Treasury at Mercy Corps has concerns and our compliance people have concerns, and it does take time, effort, and energy to sort all that out. That said, it is not unmanageable. And, you know, we emphasize, of course, staying within the regulations and operating within the laws of the countries where we operate. That's very important to us. So it does mean we have to go slower in some places than others. And I think it's important to note, nobody's said it up to this point, you know, all of us on this call, you know, we work in some really difficult places. And some of those places are going to remain really difficult. And some of these tools are not going to be applicable there. However, as Matthew pointed out earlier, the number of places where there is potential application of these sort of tools is increasing. And we see that as an ongoing trend, and we think it worth dealing with and being on the front end of this. And I'll stop there.
Thanks. Thank you, Rick. Okay, so the next set of questions is just about the resources and the funding. So I'll group them. And we'll have the opportunity to hear from each of the panelists. So our blockchain and crypto areas where NGOs should be recruiting technical experts as FTEs, or should we outsource that technical expertise and keep focused on where we're already experts? And then the question related to funding, what funding have you used to launch these programs? Are there specific donors supporting this? So expertise and funding related questions. Rick, and Matthew, we just heard from both of you, so let's go to Michael and Stephen, then we'll come back to two of you at the end. And please keep it brief because we are at 1 minute.
Yep. So
Michael?
I'll be very brief. I'll be very brief. If you're an NGO that can afford to acquire blockchain talent, I'd love to know who you are. We formed a partnership with a number of universities, the main one being Oxchain, which we formed at Lancaster University, and they're working through blockchain type solutions for us. So I thoroughly recommend engaging with the academic sector. They can well partner with you and get the talent that you need for these things. And that's been how we've addressed it. My own personal view is if I had resources or money, I would be putting it into compliance, because actually that's where the challenge is for us. I think there will be many different use cases, but making sure that we're compliant from a legal perspective and all the other perspectives such as aid diversion, etc. It's our compliance capabilities that we need to build up, not highly expensive technology resources that we can't afford to keep.
Thanks, Michael, for highlighting that. Stephen?
Yeah, sure. A couple thoughts. One, I was speaking to someone at USAID in their digital financial services group, and this really comes down to a question is there funding opportunities coming down the pike, specifically for blockchain or cryptocurrencies? The question really was, or the response basically from this gentleman was, we're still trying to look for scalable pilots in any of these different areas. And so until the funding gates kind of open up, being able to develop budget for hiring, recruiting technical experts becomes a bit more challenging if there's not an ongoing funding stream to be able to pay them. So therefore, I feel like most of the larger NGOs or smaller ones still will have difficulty being able to keep them on hire. So that is probably the most important thing I would say. But I would say also, we've had outreach from Oracle, from IBM, Microsoft. A lot of the large big tech companies are reaching out to NGOs interested in trying to develop partnerships specifically in cryptocurrency and blockchain. So partnerships is an opportunity both on academic side as well as on big tech side to kind of start to experiment in this area.
Thanks, Stephen. Matthew and Rick, anything else to add regarding expertise, so resources and funding?
I'll throw in really quick, just from the Kiva standpoint of, I think if the technology, like decentralized technology and blockchain, will become core to your operating thesis over the next couple of years, that yes, you should find a way to get funding and put at least one FTE on it. But that said, there are so many external resources like Stephen and Michael have talked about, but places like Linux Foundation that have open source tech, that it does not take a massive team to actually build a lot of institutional knowledge on blockchain and decentralized technologies.
Fantastic. And Rick, any final thoughts?
No, I think everybody's covered the points. They've done great on this.
Excellent. Well, I'd like to, with this, first of all, thank the fantastic group of panelists, Rick, Matthew, Stephen, and Michael. Thank you for joining us and sharing the work that your organizations are doing and reflecting on some really important and complex questions. And then thank you to the audience for just fantastic set of questions. I'm sure we'll be discussing a number of them at the summit, so we hope to see you at the summit. Thank you all.
Thank you for joining us today. We'd like you to fill out our webinar satisfaction poll. It'll pop up in a window when you leave the meeting, and we look forward to seeing you at the next NetHope Solutions Center session. Please have a great rest of your day. Thank you.